All right, the final quarter of the year is officially upon us. And for the crypto world, it's all about 5 key dates. We're talking about everything from huge economic decisions to massive regulatory changes that are absolutely going to shape where the market heads next. So let's break down exactly what you need to be watching. Think of this as our roadmap for the next few months. We're kicking things off with the Fed's big meeting in September. Then we'll dive into some really important ETF and regulatory deadlines. And we'll wrap it all up with 2 dates in December that are all about the market's internal pulse. Each one of these could be a major catalyst. So first up, the Fed. Before we can even get into the nitty-gritty of crypto, we have to look at the bigger picture. Because the mood for pretty much all risk assets, and that definitely includes crypto, is really set by one place, the U.S. Federal Reserve. And that brings us to the million-dollar question for September. Is the Fed, or more specifically, the FOMC, finally going to cut interest rates? Their decision on September 16th and 17th is basically the starting pistol for Q4. Now, depending on what they decide, we could be looking at 2 very different futures. See, if they cut rates, borrowing gets cheaper, and that could inject a whole lot of new cash and volatility into assets like crypto. But if rates hold steady, the market just keeps grinding against the same economic pressures we've been feeling all year long. This one decision really sets the tone for everything else that follows. Okay, so once the Fed has made its move, the next big force we've got to watch is regulation. And this quarter, we have 2 critical deadlines, one that's laser-focused on a single asset in the US, and another that's going to affect the entire market across Europe. It's really interesting because we're seeing 2 completely different approaches here. In the US, it's like surgical precision. They're looking at a potential Solana ETF, which is all about giving big institutions an easy way to buy into one specific crypto. But then you look at the EU, and they're rolling out MiCA. That's their markets and crypto assets regulation. It's not about one coin. It's a massive, comprehensive rulebook for the entire industry. It's a brand new standard for every crypto company operating on the continent. For Solana holders, these 2 dates in October are, well, everything. If the SEC gives the green light, you could see a wave of institutional money pour in. Kind of like what we saw with the Bitcoin ETFs. But a denial? That would be a serious setback. All right, so we've talked about the big external forces, economics and regulation. Now let's switch gears and look at what's happening inside the crypto industry itself. Because in December, we've got 2 key dates that are really going to test the market's own momentum and its psychology. First up, December 3rd and 4th, we've got Binance Blockchain Week. Now you might be thinking, why does a conference matter so much? Well, these big events are often used as launchpads for huge project announcements and new partnerships. It's where market sentiment gets built, and that can act as a powerful engine, especially for altcoins that are just looking for a story to kickstart a rally. And then there's this date, December 22nd. Now, this isn't a regulatory deadline and it's not a conference, so what in the world makes this one day so important? The answer is all about one thing: market psychology. You see, this specific date has been singled out by some popular on-chain models as a potential peak for this Bitcoin cycle. Now, the key here isn't whether the models are right. The real power is in the fact that thousands of traders believe it's an important date and are already planning to trade around it. And that right there is the essence of trader psychology. It's this wild idea that when enough people believe a certain date or a certain price matters, their combined actions, all that buying and selling, can actually create a self-fulfilling prophecy. In a way, whether the model is accurate or not almost doesn't matter. The power of that shared belief can be enough to move the entire market. So let's just recap for a second. Q4 is really a story of these 3 different forces all colliding. You've got that top-down macroeconomic pressure coming from the Fed. Then you have these foundational new rules being laid down by regulators in the US and the EU. And at the same time, bubbling up from within the market itself, you have this internal momentum driven by industry hype and some really powerful trader psychology. So what happens when you mix macroeconomic uncertainty, huge regulatory shifts, and a major psychological target all into the same 3-month period? It feels like volatility is pretty much a given. The only real question left is which one of these powerful forces is going to win out and set the market's direction heading into the new year.